So officially, good morning and welcome. Saturday, the 16th of October. Can you believe it? And we are into week 3 of the L+Earn financial literacy program for young adults. Hashtag secure the bag. I think it's been absolutely amazing up until this point. I know last week was totally lit and today it promises to be even more. I think the way these webinars have been structured have been so great because it's literally been structured to just level up every week. And so I really want to thank all of you again once more for being part of this webinar series. Thank you for joining. Thank you for showing up on time. Thank you for being committed to changing your financial future and for really empowering yourself with knowledge. There's absolutely nothing that can replace knowledge, and especially when it comes to financial literacy, it's so important. And that's why this program has been crafted by the ASISA Foundation to really help young adults like yourselves who are in university and going to be entering the world of work soon to really start creating good financial habits even at this stage of your life. So let's get into it. And today our topic for webinar 3 is going to be investing part 2. We started last week on the journey, started chatting slightly about investing and savings, and today we're going to really dive a little bit deeper and we're going to be talking cryptocurrency. We're going to be talking online trading, and we've got a couple of panelists with us. So I'm going to quickly invite my guests. As you know, I'm not alone. I've got the entire team in the background running this webinar. So remember, Crystal is available for your assistance. If you've got any issues, just type in the chat and Crystal will assist you. But let me quickly welcome our panelists. We've got Imran Logart. Imran, if you could quickly say hello, just to come on camera, give us a wave and just let everybody know. And
morning, everybody.
So that's Imran. Imran's going to be having an in-depth chat with us a little bit later about cryptocurrencies, and we're looking forward to that. And then let's also welcome Sydney Sikese, who is our additional panelist this morning. Sydney, if you could say hello to everybody.
Hello, everyone. I like the vibe already.
Awesome stuff. Guys, so the three of us have met already prior to this webinar with the rest of the team, and I can assure you, you are in for an absolute treat this morning. It's going to be great. So before we get into it, remember that the L+Earn Moodle platform is available to really just continue and extend the discussions after the webinar. So please register, use it weekly. There's great resources, forums, quizzes, incentives, and also go to the website www.l+earn.co.za, and remember you can interact. If you haven't yet received your login details, send an email to crystal@groundedmedia.co.za. She will type it in the chat. You can send an email through to Crystal and she will sort you out. And then please remember to log on to Moodle. That's so important. A couple of prizes for participation on Moodle this week. So this is the person who was the first one to complete the savings and investing quiz and participate in the savings and investment forum. And so our first winner for her Moodle participation in the last week is Lindsay, or Lindsay, I don't know how you say it, but Lindsay, big snaps for you. Everybody say congrats to Lindsay. Well done. You get yourself a 300 Rand voucher to use at Checkers, so that you can use 300 Rand that you would have spent on groceries or shopping at Checkers, you can now save, all right? So well done to you, Lindsay. And then our second prize for this week goes to the most engaged student in forums, quizzes, and chats over the last week, and that is Maleho, all the way from the University of Limpopo. So well done to Maleho. Congratulations to you. You also get a 300 Rand voucher from Checkers, and you get to save 300 Rand and use 300 Rand towards something else this week, maybe some cryptocurrency. All right, so well done. Guys, well done to all of you. Please stay with us. We will announce more winners from today's webinar at the end of the session. So please do participate in the chat. Let us know throughout the session. If you've got questions, type them in the chat. And remember to keep using the hashtag secure the bag. All right. So we are in week number 3 already. Can you believe it? And so today we're talking investing part 2. Next week we talk about credit, and then we're still going to touch on topics like work readiness, finance and mentorship, entrepreneurship, and we're going to be ending the series with talking about side hustles. All right, remember that you do need to try and participate in all of the webinars. You get a certificate of attendance for attending these webinars, but in order to do that, you need to at least attend 60% of the webinars so that you do get your certificate of attendance. Remember that you can log on to www.l+earn.org.za, and you'll be able to watch replays of all of the webinars after these sessions. All right, guys, well, let's get into today's topic. So today we're going to be talking about cryptocurrencies, particularly focusing on Bitcoin. We have an expert in the house who's going to be really just imparting tons and tons of knowledge around cryptocurrencies. And I think it's because of the fact that we live in a time where we cannot ignore cryptocurrencies anymore. We're going to be talking about online trading. We're also going to talk about investment fundamentals, and then the role of a financial planner or a financial advisor. I remember one of the questions last week we had was, how do we become a financial advisor? How do we choose a financial planner? And so that's what we're going to be diving into as well a little bit later on with Sydney. But let's kick off with cryptocurrencies and talk just a little bit about what they are. Now, I am no expert, and that's why we have an expert on the webinar today. But in essence, what cryptocurrencies are is a virtual medium of exchange. So these are digitally created and digitally stored, all right? So it's not physical money. It's not regulated by any central bank, such as the Reserve Bank or of South Africa. It's managed by the user themselves, all right? So without the need for a bank or a financial intermediary, and there's very minimal fees that are involved. And I'm sure Imran will touch on that as well. It's stored digitally, and so one of the disadvantages of that is obviously the risk of it being hacked or your computer crashing. I don't know if you guys saw, there was a story a couple of years ago about somebody who forgot his password and couldn't get his Bitcoin. All right, so that's some of the challenges that we obviously hear about, and I'm sure that Imran's going to dive deep into that as well. And then prices of cryptocurrencies are generally linked to supply and demand, and they can be quite volatile. All right, and then it obviously is there is a propensity to fraud, or it's open to fraud sometimes, particularly for those with limited knowledge. And so it's so important that when you get into this space, you go in there knowledgeable. And that's why we have this discussion on this particular webinar series, because we know that so many people fall prey to scams and are taken advantage of. And so hopefully after today's webinar, you're going to know a lot more about Bitcoin and how, if you're wanting to get involved in that, I'm sure Imran is going to really help you get along there. Then when it comes to online trading, guys, what online trading is this entails buying and selling of stocks, equities, shares, currencies, other financial instruments, and selling it frequently to make a profit. All right. So it normally involves buying low, selling high, and it requires skill and experience. Okay, so it's not as simple as that, but I guess it's also not as complicated as that. But again, what we've been talking about up until this point is invest in something you know. So don't go into all of these things blindly. And this can be done through stockbrokers, or you can do it directly through online trading platforms, all right? And Sydney's going to be touching on that when we get into it in a while. And then we're going to talk about the role of a financial planner or a financial advisor. And so financial advisors are trained professionals, and that's very important. They are trained professionals, okay? And they share their knowledge and expertise about the financial products and solutions, and so they can help you understand the investment returns you need to expect, or you need to know how to achieve. Then they identify the most tax efficient and cost efficient way for you to invest. They help you avoid scams. All right, they can like spot the scams so quickly. I'm sure you remember how last week Tungai was able to tell us about some of them. And then with advice how to protect yourself against financial risks such as death, disability, severe illness. That's what a financial planner is supposed to do, help you really plan your financial future. And so you can contact the Financial Planning Institute to check if somebody is registered, and also they would be able to put you in touch with certified financial planners or the FSCA to check if your financial advisor is authorized. All right. And so we're going to get straight into the discussion today, because I know that Imran has got quite a bit that he's wanting to share with us. And so without further delay, it's my absolute pleasure to welcome our first guest to today's webinar. And his name is Imran Logart. Imran is an actuary in the reinsurance space. His experience spans global markets, including South Africa, Europe, and the Middle East. As a cryptocurrency enthusiast, he has published articles on Bitcoin in a variety of industry publications. He's a regular speaker at conferences and and he has appeared on radio and television. Imran is also a contributor to a textbook on cryptocurrency related technologies. It's called Mastering the Lightning Network. And you can read a lot more about Imran's writings on www.imranlogart.com. Imran, thank you so much for joining us. I'm going to invite you to switch your camera on, and you can actually share your screen as well. And then over to you.
Hi, everybody. Can everybody see me and hear me?
We can see you and hear you just fine.
Cool. Thank you, Darren, for that introduction. So today, firstly, I just want to say, thank you everyone for showing up. I mean, I think 60 plus people showing up on a Saturday to talk about investments. I think that's really great. And I hope you're going to get a lot out of these two talks. So today, what I'm going to cover is I'm going to cover two things. Give me 1 second. Sorry, screen's not updating. There we go. Okay, yes, I'm going to cover two things. Firstly, I'm going to just give you a background on Bitcoin, specifically like what is Bitcoin, how does it work? And hopefully that'll explain a lot of, maybe answer a lot of your questions up front. And then in the second part, we're going to talk about investment fundamentals. So this is going a bit more general, talking about investments in general, but a lot of this will apply to Bitcoin and cryptocurrencies as well. Okay, so let's get in. So what is Bitcoin? So usually when people think about Bitcoin, they think, okay, it's this currency that you buy and sell on exchanges called BTC. It's worth X many dollars and you buy and you sell it and trade it. But that is only one part of Bitcoin. And Bitcoin is actually three things. So I like to think of it as three different components. The one is software. So we'll talk about what the software does in a second, but Bitcoin is actually software that you can download. You can have it on your phone, on your PC, and it does a number of things that we'll talk about in a second. Secondly, Bitcoin is a network. So like the users of WhatsApp form a communications network, you could call it the WhatsApp network, the users of Bitcoin form the Bitcoin network. And then lastly, on this network, using the software, you have people send back and forth this currency, which is known as BTC, which gets traded on exchanges and has a value of around $60,000 as of today. And that is the financial aspect, but Bitcoin is all of these things. So kind of the best way that I can explain it to you is with an analogy. So we're going to talk about something that everyone does know very well, which is email. So on email, you can have me, you can have this other guy, someone I presented with at the ASISA investment seminar, and you can have a space cat. And I can be using Outlook, which is a kind of an email software. And Hus can be using Gmail, which is another email software. And this guy can be using Thunderbird. And we are all using different versions of email, but we're all using email software. So we can send text communication, and we can send it anytime, regardless of the time of day, regardless of whether the post office is open or closed, regardless of borders, instantly around the world. And if someone is on the post office, then they're not part of this network. And email is basically digitizing text communication. So Bitcoin takes the same principle and applies it to money. So I can be on Eclair mobile wallet, which is a wallet for Android phone. Hus can be on Bitcoin Core, which is a PC version of the Bitcoin wallet. This over here is, it would be another Bitcoin wallet. And as long as we are all using Bitcoin compatible software, we are all using Bitcoin wallets, we can send Bitcoin to and from each other anywhere in the world, regardless of country, regardless of the time of day. And Nassim over there on the right, who's using the traditional financial system, he would have to wait 2 days for an EFT, or we'd have to wait 1 week for an international transfer. So now I'll kind of just take you through a Bitcoin transaction, and that will kind of show you what the technology does in practice. And this is a transaction that I did not too long ago on my phone. And you can see over here, it is for a very small amount. This is what is called 10 Satoshis. A Satoshi is 100 millionth of a Bitcoin. It's a very small amount. So this is 10 Satoshis. And at the time I did this transaction, the financial value of this transaction was 1/3 of a US cent. So that's like a couple of South African cents. And I did it on a phone, and it's actually this phone. And just check the time over here. So this is 14:26. I click pay, and it's still 14:26, and it's paid. And where did I send it to? I sent it to an online casino, and I am not advising anybody get into gambling. This is about investing. So, but I do endorse micropayments, just not gambling. So there you can see there's the 10 Satoshis, and I decided to bet everything on black, and I ended up winning twice. You can see there's my 40 Satoshis that I've got. And I decided to do what any prudent investor does. I decided to not ride my luck too much, and I withdrew my money. And I withdrew it, and it's back in my wallet. And there you can see it's 14:33. A couple of minutes have passed. It took me more minutes to do the screenshots than to do the payment. But there's the 40 Satoshis. That is 1.3 US cents back in my wallet. So let me just explain what I just did. I just sent 1/3 of a US cent, which is an amount so small, you cannot send it in the current financial system. I sent it internationally, instantly to a business, and I got it back instantly. So this is kind of what the technology of Bitcoin allows you to do. It allows you to send money globally, regardless of borders, regardless of when banks are open or closed. And you can do it instantly, and the fees I paid on this were basically negligible. And there we go, I've got it. So the easiest way I can explain like what is interesting about Bitcoin and why there's been so much focus on it in the last 10 years is that it's a new technology, and Bitcoin is to money what email was to the post. So this is the kind of the big innovation of Bitcoin. It takes money and it makes it digital. And as Darren pointed out, there's still quite a lot of risks with it. There's still a lot of hitches and kinks. Like you can lose your money if you don't know how to use it responsibly. But like email, and the internet, it took a long time to develop, and it's still very much early in its cycle. But when I say early, I mean 10 years. So 10 years. Remember that the internet took about 40, 50 years to get where it is today. It was kind of launched in the 80s. Bitcoin is only first in its first 10 years. And this is the market capitalization over the first 10 years. So now we're going to switch and we're going to talk a little bit about the financial aspect of Bitcoin. So Bitcoin was first created in 2009, and this is the market capitalization. So market capitalization is basically for a stock, that would be what is the total value of all the stocks in existence. So this would be what is the total value of all the Bitcoins in existence. And as of this morning, it's sitting at about $1 trillion US. And it's a bit difficult to see that growth over, on this scale. So I'm going to put it on a log scale, which is powers of 10. And kind of just going through the history very quickly, back in 2010, which is the first time that Bitcoin gained any kind of financial value, the total value of all Bitcoins was less than $1 million. First broke $1 million, which sounds like a lot, but it's very small in global asset terms. I mean, most companies are worth dozens of millions. Well, the large companies worth dozens, if not hundreds of millions. In 2011, it broke 100 million. In 2013, it broke $1 billion. For those of you who were around in the 27 hype cycle, that's the first time it broke $100 billion US, which is quite a significant milestone. And earlier this year, for the first time, it broke $1 trillion US. So the people who've been involved in Bitcoin and have managed to hold throughout this time have made a lot of money. But you can see that the graph goes up and down all over the place. It's been very volatile. Those are people who've tried to trade and outsmart the market, who've bought and then panic sold when it went down. Those people have lost a lot of money. But the ones who've been able to sort of stay the course, invest and forget about it, leave it there for the long term, those people traditionally over the last 12 years have done very well in Bitcoin. And I want to also just focus on this 1 trillion and kind of show you where that fits into the global market. So this is a list of all of the world's largest currencies and kind of measures them in terms of the market capitalization of the different currencies. And at the top, you can see the largest currencies would be the Chinese yuan, the US dollar, and the euro. If you think of Bitcoin as another currency, like Darren said, it's not backed by a reserve bank, it's not issued by a government, it's an online independent currency, it would be considered the 14th largest currency in the world, which is, if you think about it, for a currency that's not backed by government, that's kind of insane how it got you in 12 years. It's already bigger than the Russian ruble. You can see over there, it's bigger than the Thai baht. And if you scroll down, it's actually a lot bigger than the South African rand, which is us over there as the 31st biggest currency in the world. So one of the ways I like to conceptualize this is that there's 62 million people living in South Africa. About 62 million people's economic, contribution is contained in this currency, and Bitcoin is really larger than that. And based on the available statistics that that I've looked at, Bitcoin is somewhere around 200 million users estimated. It could be more, could be less. So if you start thinking, okay, 200 million people's worth of economic value contained in the currency for 60 million, those numbers can make a little bit more sense. But that's one of the ways of conceptualizing Bitcoin as a large, you could say, independent online country in some sense, or the currency of an online nation, if you want to call it. And this is just me graphing it out as well, comparing it to some of the others. And you can see that I took this on Thursday, but it's a little bit higher since. But currently, Bitcoin is sitting at higher than the South African rand, and it's also sitting at higher than the Johannesburg Stock Exchange, which is quite extraordinary. Compared to global markets, it's still very small. So you can see that it's a tenth of gold. The yen, the euro, the US dollar, and the yuan are all much bigger. And this is one of the reasons why Bitcoin is so volatile. It's because the JSE is only really traded by people in South Africa. Bitcoin is the same size, but it's not only traded by one country, it's traded by markets around the world. So it's very volatile. It's very small in the global market, as long as it remains small, it can be volatile, but it has been growing in significance and is playing a bigger role in the global markets. And another interesting thing about it that I think is worth looking into if you're interested in Bitcoin is it has started to gain significance as more than just an investment. Last month, El Salvador, which is a country in Central America of 6.5 million people, became the first country in the world to adopt Bitcoin as legal tender. So what that means is that you've got in that country, El Salvador, you've got the US dollar, you've got Bitcoin. You can go into a store and you can pay for stuff using Bitcoin, and you can pay your taxes in Bitcoin, you can pay your debt in Bitcoin. There are some other countries looking at it as well now, but this is something that is potentially, driving some of the value. I mean, here you can see this is a person, doing motorbike rentals, and you can pay in Bitcoin. So, Bitcoin has now been adopted by one country. Some other countries are considering it as well. If it becomes adopted as well, it starts to become something that also becomes used by nation states as a currency.
Imran, if I can just jump in there quickly,
sure.
because I think you've just answered the question, and if you want to elaborate, but I think because one of the questions from Tembela was, what would happen if Bitcoin became nationalized? So is that an example of where it's now become nationalized in a country?
Definitely, yeah, 100%. So you can't actually take Bitcoin and nationalize it because it's kind of owned by its users. So a government can't actually take over it. They can only kind of buy into it and adopt it and, maybe buy some Bitcoin for themselves. But this is kind of what that would look like. A country could perhaps adopt it, allow it, allow you to pay taxes, allow you to pay your debts, allow a merchant to accept it. Like I said, for some countries that are, like you could say, maybe not as stable, or, like El Salvador was a very small country. They used to use the US dollar before. The US dollar caused them issues, and they didn't want to launch their own currency. So Bitcoin is, and they're also seeing it for the international payments as well. So El Salvador is a remittance-based currency. I think about half their GDP is money that comes from the US and is sent from migrant workers in the US, and they send it back home to El Salvador. So for them, Bitcoin is a way of sending that money a lot more cheaply. So that's kind of what it would look like if a government had to adopt it. They might view it as a policy instrument. Okay, cool. So can I go?
Yeah.
Cool. Okay, so that takes me to the end of the first half, and that was just a very, very high level picture, but if you want, you can ask me more in the questions. So Bitcoin is a software, it's a network, and it's a currency. It is already larger than 100 plus government currencies, and it is growing importance in global markets. So that's just a very, very high level picture that, just cliff notes of what Bitcoin is and what it does. And now we're going to change gears, and we're going to talk a little bit about investment fundamentals in general. And some of this you can definitely apply to Bitcoin, but also it applies more widely. And I'm just going to touch on 3 points which I think are important if you can take home. So the first one is that before you invest, make sure that you take care of the basics. So what do I mean about the basics? I mean, firstly, make sure you are not living paycheck to paycheck. So what this means is, let's say you've got 10,000 Rand coming in. If 10,000 Rand is going out, that means come the end of the month, you've got zero. This is not the best position to be investing in. You want to make sure that if 10,000 is coming in, 9,000 is going out or less, so that you're left with a surplus. And especially what you don't want is, you don't want 10,000 coming in and 12,000 going out, and you end up 2,000 in debt, because that's living above your means. So the first thing you really want to do before you even consider investing anything in anything is you want to make sure that you are not living paycheck to paycheck, that you're managing your expenses. And when you guys have touched on that earlier in this course, we talked about budgeting and whatnot. The next thing is you want to pay off your debts. And this is important because a lot of debts charge you very high interest rates, like credit cards are notorious. I mean, up to 22% can get crazy. So it doesn't matter if you're making 5%, 10% on the stock market, but you're losing 22% on your credit card. So you want to pay off your high interest debts. So maybe the one debt that you can kind of live with is your mortgage or your car. But even those, you rather want to be paying off your mortgage ahead of schedule before you start looking at, investing. And then now you're in a good position. You're not living paycheck to paycheck. You're not sitting with debts. Now the next thing you want to do is you actually want to build up an emergency fund. So every month you've got your expenses. You buy your food, your clothing, your rent, whatever you buy. Now, what happens if something goes wrong? You get sick. You've got bills. Someone in your family needs money for something. Your car breaks down. All kinds stuff happens. Life comes at you fast, and you don't want to be in a position where things are going good and then something bad happens, and then you have to take out 10,000 Rand because you got to replace the engine in your car or something, and the insurance didn't want to pay. So what you want is you want to have about a month of expenses, maybe 2 months if you can get there, and you'll know how much you spend every month if you're keeping track of it, and that you want parked in an interest-bearing account that is easily accessible. So now you're in a position where you're not living paycheck to paycheck, you paid off your debts, and if something bad has to happen, you can take out of that emergency fund and you can pay it off. And now once you've got that, you can start building up a portfolio of investments. And The second rule, once you got to that stage, is you never want to invest in something you don't understand. Another way of saying that is you want to spend time doing your research. So like Darren said, there's a lot of unknowns about cryptocurrency. I can't explain to you in 10 minutes there's 10,000 cryptocurrencies out there. I can't explain to you in 10 minutes all of them. I can barely even explain to you Bitcoin, but you want to gain the knowledge before you invest. So a lot of people, anyone seen The Wolf of Wall Street? Seen that film? Unfortunately, investing is not really quite like that. It can be quite boring, but it's also something that it's boring, but it's also satisfying. So what I mean when I say it can be boring is like, if you want to be good at investing, you got to read the fact sheets, the investment reports, the investment prospectuses, the boring, the less sexy work. Warren Buffett, who's one of the richest person in the entire world, he spends all day sitting in his office reading company balance sheet, income statements, and understanding companies, and it's rewarded him very handsomely. He's made millions of that. And investing is something that if you're willing to put in the work, you're willing to do the boring stuff and read and learn and read books, read things online, speak to people, try and boost your understanding, you really will reap the dividends and you can make a ton of money. The next thing is that don't go into an investment with unanswered questions. If you have unanswered questions, you get them answered before putting down money. So if you don't understand about how something works, you don't understand why is Bitcoin low fees, what is it? You don't put your money in. First answer that for yourself. And that goes for companies, that goes for property, that goes for any investment. And especially as you guys become, you get your degrees and you go out and you work to become more successful, people are going to come to you with all kinds of schemes that are going to get you rich quick. And they're not going to answer how those work. And that's one of the ways you can tell it's a scam. So you need to make sure that you completely understand something and what the risks are before you put the money down. And in the case of cryptocurrencies specifically, so in the traditional investment space, you have financial advisors, you have fact sheets, prospectuses. In the case of cryptocurrencies, you don't have that. It's a new asset class. It's not very well understood by a lot of people. So you're gonna have to look online and you're gonna have to put in more work than the average person. So these are some places to start that I recommend. YouTube is a good place. There's a lot of great channels. Andreas Antonopoulos is one of the world's foremost experts on the technical aspects of Bitcoin. He's a good place to start. What Bitcoin Did is the most watched Bitcoin podcast in the world. That one is more aimed at beginners. They've got really great beginner series. I'm a regular listener. I recommend that one as well. The Bitcoin books are also a great place. There's a lot of books out there. The Bitcoin Standard focuses on the economic aspects of Bitcoin. But all of these are like kind of good place to start if you want to get knowledge and you want to really learn and you want to make money in this space. And then the last thing kind of want to leave you with is do not invest more than you can afford to lose. So Bitcoin is still a speculative asset class. So what do I mean by that? I mean that Bitcoin is not an asset class with a long track record. And we'll get into that in a bit more. So firstly, what I mean is don't invest money in the short term. So if you need that money to pay rent at the end of the month, if you need that money to pay expenses, that's not the money you want to invest. So if you invest in Bitcoin, let's say you put your whole paycheck into Bitcoin, Bitcoin now goes down by 20%, come into the month, you can't pay the rent. It's a bad idea, not good financial advice. So don't invest money you need in the short term. The next thing is also don't bet the farm. So another way of saying is secure the bet, this is investment parlance for don't invest money that if losing all of this money is going to put you in a bad situation, like you're going to have to sell your car, you're going to have to sell your house, you're going to have to go on the street, if investing that much money and losing all of it is going to put you in that situation, that is not the money you want to invest. So you want to invest money that it's good if it goes up, but if it goes down, you can still meet your expenses, you can still kind of get by. And once you've got that money that is not the short-term money, not the farm, you still want the bulk of your portfolio to be in stable asset classes. So these are assets that have a long track record, that are well-known, well understood. And I can tell you from my perspective, I'm heavily invested into Bitcoin, probably more than a lot of people. And maybe some people will think I'm a bit crazy. I think I've done pretty well. But even for me, who have been involved in Bitcoin for a long time, I've done a lot of research. The bulk of my portfolio is still in traditional asset classes. So that would be your internet, your stocks, your equities, international and local. That'd be like your pension fund and your RAs. That would be like properties, fixed interests, all of those kinds of things. So you're literally your traditional asset classes, the ones that have a long track record, the ones that are regulated, the ones that are secured and insured. Those ones are where the bulk of your money should be. Speculative asset classes are asset classes where you can potentially make a lot of return, but you can also lose a lot of money if you don't know what you're doing. And there's a lot of scams, as Darren said, and because they prey on the fact that people don't understand how these things work, and they come to you and they tell you, I've got this thing with no risk, it's going to make you millions. It's not. No such a thing as a no risk investment. So like I said, so if you're interested in Bitcoin and cryptocurrencies, make sure that you've first been building up your traditional asset classes first. And once you're kind of satisfied with that, you can start thinking about putting some money into some other place as well. So I'll just kind of summarize. So it's take care of the basics. It is do your research. And it is don't invest more than you can afford to lose. And I think at this point, I am going to hand back over to Darren. So thank you for your time, and I'll stick around for questions at the end.
Imran, thank you. That was so informative. Tons and tons of comments coming through. Lots of people saying thank you.
Yeah.
I think one of the comments that came through was, it's great how you are telling us about the rewards, but you are also highlighting the risks. And I think that's absolutely great. So thank you so much for that. Maybe quickly before we move on to our next part of the discussion, one question is that's come up quite regularly is how does one start if one wants to think about investing in Bitcoin?
Sure. So I can take that very quickly. Can I share my screen very quickly?
Yes, go for it.
So I had that as one of the questions that came in before the presentation. There we go. Where should I buy Bitcoin? Okay. So the best place to start is you want to buy on reputable registered exchanges. So some guy approaches you in a back alley and tells you, hey, I got some Bitcoin for you on WhatsApp, sneaks to your DMs. That's not the place. You want to use a reputable licensed exchange that is legally operating in South Africa. So the well-known ones would be Luno, Binance, Valor. I mean, I tend to use Luno, but I don't give them any particular recommendation. There's a lot of good ones out there. So how you would start is you would sign up an exchange, get yourself an account, get verified. You would send money to the exchange, and then you would buy. And generally speaking, that would be the first step. And my personal recommendation is it's a very volatile market. So if you decide you're going to become, Gordon Gekko and start trading, you're probably going to lose your shirt. At the start, maybe put in a small amount of money as a test, something that you're comfortable. If it doesn't go wrong, it's okay. You buy it and you just leave it there for a particular amount of time. If you decide to become more serious, you can start putting in a small amount every month. That's known as like dollar cost averaging. But in any case, that's kind of where you want to buy. And if your portion becomes large enough that it's significant, you want to start looking into securing a Bitcoin, but that's probably a more advanced thing.
Thank you so much. We're going to get back to you at the end of the webinar. So please start thinking about a tip for the week, and we'll get you back at the end, Imran. But thank you so much, guys. One of the things that stood out, and you might want to like post this somewhere and use the hashtag secure the bag at the end of this quote. But I think what's a great thing to remember that Imran said was, if you have unanswered questions, don't put your money down. Hashtag secure the bag. That's how I would put it on my status today. All right, next up, we're going to welcome our next guest, who is Sydney Sekese. Sydney is currently the Senior Investment Specialist at Old Mutual Corporate. He is a certified financial planner who sits on the Financial Planning Institute's Employee Benefits Competency Committee. He's a sought-after public speaker. He writes regular investment articles for the FBI, and his insights and expertise are often requested by the media. He was the recipient of the 2016 FPI Media Award. He's a former member of the Toastmasters Club, and he serves as a committee member of the Old Mutual Staff Retirement Fund. So he knows what he's doing and he knows what he's talking about. Sydney, thank you so much for joining us. If you could please come on screen, and we're going to get into the discussion with you.
Morning, everybody.
Great to have you here, Sydney. I think so two of the things that you're going to touch on today is firstly online trading, and then we're going to talk a little bit about just the financial planning world. So maybe kick off by telling us what is meant by online trading. Does it differ from other forms of investment, and how does it differ from other forms of investing?
Online trading is really simply an opportunity or a platform for you to buy and sell assets, and these assets range from shares, bonds, mutual funds, or what is called ETFs, options and futures, also currencies. There's also, you can trade Forex using online trading. And, apart from reducing the trading costs, this benefit also makes trading hassle-free. So it's an opportunity to provide a seamless platform to ensure that you buy and sell whatever commodity that you are interested in. So really online trading basically is used for profit making, but it could also be used for buy and hold. So depending on the nature of your transaction.
Great. So what are some considerations one needs to make if one wishes to get into online trading?
Yeah, as a general rule, you should never invest more than what you're willing to lose. As Imran has said, I fully concur with that. I think it's a theme for today, you know. You need to have a game plan, and that game plan, you know, aims to remove emotions, because, you know, once you're on online trading, you tend to hug the particular investment, and even if there's an opportunity to sell, you may be tempted to hold on to a share or a commodity that is about to collapse. So if you have a game plan, you need to stick to that plan, so that you know, very key, you're not emotional about any particular investment. Do join a community of similar like-minded individuals who are on online trading. Again, research and do more research. Don't fall victim to scams. Set a budget, and very importantly, try to diversify. Don't put all your eggs in one basket. You know, obviously, you know, if you invest in a particular industry and if that industry goes into a turmoil, then there's no opportunity to recover. So if you've got a diversified portfolio, you stabilize your outcome or your required rate of return.
Sydney, so I know that Imran touched quite a bit on the fundamentals of investing. Are there any others that you would like to add?
Sure. One fundamental is, you know, when you're investing, apart from online trading or trying to source profit, time in the market is key rather than timing. I wish I had a crystal ball which would tell me when to buy, when to sell. But unfortunately, when investing, no one has predicted with 100% certainty when a particular share or particular commodity would collapse or when it would rise. So that's very key. If you're interested in investing, it's time that is very key, because in the short term, things like shares tend to be volatile, but over time, that volatility reduces, and therefore time is very important. The horizon is very key. One other aspect with investing is past performance is not an indicator of future performance. So most of us tend to look at, if you're interested in collective investment or unit trusts, and you want to select a particular unit trust, past performance is part of the decision-making, but it's not the only decision-making tool. Use it with caution, because most of the top performing unit trusts, for an example, do not maintain that lead over time. So it depends on the philosophy, people managing that, and so forth. And again, last fundamental, there's a lot of consideration. I'm just touching on the periphery. The credibility and track record of the system that you're going to use is quite key to avoid disappointment.
Great.
Yeah.
There was a term that you mentioned when you were talking about online trading, and I think it almost feels like jargon to some of us when you spoke about buy and hold. What does that mean?
Interesting, lovely stuff. So investing means, you know, you've got a strategy in place to buy a particular, let's say a share. Buy and hold means you buy with the intention of making a return over a long term. So that hold means term. It's more about term rather than buying and selling where you just want to get a quick profit. So buy and hold is just, you know, buying with a long-term strategy in place.
Nice. Sydney, let's transition the conversation now into the role of a financial planner. And so when it comes to investing, what role does a financial advisor or a financial planner play?
Yes, so a financial planner complements your goals in investing. The financial planner assists you in your journey. They assist you to set realistic goals, and together with your financial planner, you monitor progress in relation to those goals. And again, a financial planner would help you to reduce some of the biases that you may have, like anchoring. Sometimes you may be anchored on a particular belief, and a financial planner would blend that and give you a different perspective. Again, there's a tendency, especially with students, of a herd behavior where we all flock into a particular product without due consideration of your risk appetite, because no two individuals have got a similar risk appetite. And risk appetite here means, you know, how concerned would you be of losing your initial investment. And if you're fully concerned, then you are risk averse, as opposed to another individual who wouldn't mind losing that investing. That one is risk taker. So a financial planner helps you to identify what type of risk, your risk profile. Yeah, and again, you know, most of us would like to do a DIY type of arrangement with your finances. So a financial planner helps you to see life in another different way.
I would then guess that, as you mentioned, some of us have different risks, risk profiles, or some of us have different even goals and
Yes.
dreams and different things that we like to achieve. So I would guess that there are different kinds of financial planners as well. So what kind of financial planners are there, and what should guide one, particularly young adults and the guys on the webinar today, what should guide us when choosing a financial planner?
Yeah, a financial planner should have your interest, your best interest at heart. Historically, there were commission earners who used to push products just to earn commission. So the regulation has really evolved over time, where you know, financial planners need to be regulated. They need to have an FSP license, financial services provider license, license with the financial sector authority. And, you know, the financial planner who follows a 6-step process is credible. And that 6-step process really takes you through a journey. You actually enter into a relationship with your financial planner so that you realize your dream. All the attendees in this forum, I urge them to have a dream, and that dream should be classified in short-term, medium-term, and long-term dreams. And together with your financial planner, you would be able to monitor how far you are in terms of reaching those dreams. So, you know, a credible financial planner is someone who has got fit and proper requirements, which means they have sufficient training and education as well as experience. And one would really look at a certified financial planner who has gone through rigorous training. There are exams that are written to ensure that, you know, they're not to remove unscrupulous tendencies.
Great. I think the final question for you, Sydney, would be, how often should one consult a financial planner, or can we DIY?
Interesting. Yes. So the bare minimum is annually meet with a financial planner, or if you have life-changing events. For an example, if you graduate and start your first job, or if you get married, or if you divorce, or there's a untimely death in the family, that's when you really need to align with the change in your circumstances. So bare minimum is annually, but I would also encourage regular meeting, especially in this current and uncertain environment that we are currently experiencing in terms of financial and economic environment.
So how can we then maximize returns when investing, even in this volatile times that we're living in?
True. Look, returns are relative. So if you say you want to maximize returns, in relation to what? So it is very prudent for one to have a benchmark when you invest. A benchmark could consist of an index, or do you want to beat a particular index over medium to long term, or do you want to prudent objective is to outperform inflation, because the inflation could be the elephant in the room, and a credible objective is to outperform inflation over a medium to long term by a certain margin, maybe inflation +3, inflation +5%. And together with your financial planner, you will be able to package appropriate solution to meet those investment objectives. So maximizing your returns is a relative game. Maximizing your returns, you shouldn't look at what your friend has achieved. Look at, you should be looking at a particular benchmark or objective.
Wow. Sydney, I'm sure we could pick your brain all day, and this has been so informative, but I'm going to let you go for a moment, and then I'm going to bring you back at the end with to please give us a tip for the week. So maybe you can start thinking of that, but I think this has been so enlightening.
Thank you.
Thank you so much for sharing your expertise with us. I saw one of the comments that just came through and says, guys, 1 hour is not enough. And I absolutely agree. It's like, where has the time gone? I'm sure we have tons more questions for Imran and tons more questions for Sydney. And so here's the thing, guys. Remember that the Moodle platform is there to continue this experience afterwards. And so a lot of the questions are not able to be addressed in the webinar. And so what we are going to be doing is posting questions and answers that come from these webinars on the Moodle platform. So please, if there's anything that you do, make sure you've registered on Moodle. Make sure you go to the website, www.l+earn.org.za, and you're going to find questions and answers. I think we're going to even get some of the questions through to Imran and Sydney, and hopefully they can answer those for us, and we can put them up on the platform. 2 of the questions that came through, Imran, maybe you can just start thinking about it and you can touch on it when we bring you back, is I'd like to ask about proof of stake versus proof of work concepts. I can't seem to understand or comprehend those concepts fully. So that's one of the questions. And then the other question was, how can people get more information, particularly from you? All right, so Imran, I think one of the big questions for you was with regards to, where was it? Yes, so firstly, where can we get more information? I don't know if the question about proof of stake versus proof of work concepts, is that something that is relevant to today's webinar?
Yeah, I can tackle them if you'd like. I was busy typing up an answer, but sure, I can answer it live.
So if you could then tackle that one. So let me quickly ask the question. So the question is, I'd like to ask about proof of stake versus proof of work concepts. I can't seem to understand and comprehend the concept fully.
Okay, so what is I going to say now? So that's getting into some of the technical stuff, and that'd be interesting. If we go into that fully, it'll take about maybe half an hour to an hour, so I'll give a high level view. So maybe I'll say, Karabo, you can contact me on my website if you want to discuss it a bit more, or maybe you can just say in the chat what specifically are the concepts you're battling with. But the high level view that I'll just answer for everyone is that Bitcoin is not issued by a reserve bank, and none of the cryptocurrencies are. So the question is, how do you print more money? And in the current system, the Federal Reserve or the South African Reserve Bank will print new currency, and that's how and they will loan it to banks, and that's how it enters the system. In the cryptocurrency space, it usually gets issued by the users under some mechanism, but it's very rigorously controlled. So in Bitcoin, new Bitcoin are created every 10 minutes, and few are created every, as time goes on. So less and less new ones enter the system. And when there's 21 million, then that's it. There'll never be any more than 21 million. How it's created is through this mechanism called proof of work. And the long story short is you need to burn electricity, and this is called mining. So there's a real world cost to creating new currency. And this is part of the reason why Bitcoin has value, because you can only create Bitcoin by expending real world costs. So it's not free to create a Bitcoin. You cannot actually create a Bitcoin out of thin air. With not all cryptocurrencies follows the scheme. So proof of stake is one that some of the other currencies are using and some are looking at as well. And basically how this works is that you don't need to burn electricity. If you have cryptocurrency already, you almost like earn interest on it. So for example, let's say, this is getting a bit complicated, but let's say there's Ethereum is trying to institute proof of stake. That's one well-known cryptocurrency. Let's say someone is staking 1,000 Ethereum, and there's a total of 10,000 Ethereum being staked. That's 1,000 over 10,000. That's 10%. That means they get 10% of all the new Ethereum. So there's some issues with it in that basically if you have a lot of money, you just earn more money. So kind of like the rich get richer, but also the people who have a lot of money can kind of control the direction of the system. Whereas with Bitcoin, it's not that. Even if you burning this electricity, you have to continue burning electricity to maintain the system. But without getting into all of the details of that, that's about as technical as I'll go without going down further the rabbit hole. But one of the things is that proof of stake is something being investigated. Ethereum is still currently using proof of work. It's very aspirational. People want to use it because they're concerned about burning electricity. They want to create a system that doesn't use electricity, but nobody's quite solved all of the security challenges yet. So it's still something that people are looking through in the future.
I think you and Karabo have just turned this into a finance lecture. And I think Karabo might have a test coming up this week that you just got helped with. But thank you so much for your answer. Imran, your tip for the week?
Sure. So my tip for the week is do your homework, do your research. Put in the work.
Thank you. Thank you so much. I think we've learned so much. Maybe just give us your website again so that people know where they can get a hold of you. And also type it in the chat. I think just type it in the chat.
Okay. So that's me over there. You can find me. I also put it in the Q&A. Let me just put it in the chat as well.
Awesome. Thank you so much, Imran, and what an absolute pleasure having you on the webinar today. It was really, really so informative, and thank you for your time once more.
Well, and thank you for having me, Darren. Yeah, great webinar you guys put on.
Great, thank you so much. Next up, Sydney, your final question for you is, where is the question I had for you? Okay, so the question was, for Sydney was, as a financial planner or advisor, what resources do you regularly use to keep abreast with all the market changes and new investment platforms? And then another question was, it obviously is something that might cost people money to approach a financial planner. So can we just use the financial planners who are employed by the banks? Is that a place where we could possibly start?
Yes. Great stuff. So as a financial planner, you're actually a diversified individuals. You got to have the people skills, economic skills, financial skills. So to keep abreast and show, entails having interest in what's happening in the business world as well as the economic world. So one needs to be 2 steps ahead of your particular clientele. And again, a proper financial planner can be found anywhere as long as they are fit and proper. Fit and proper means as you engage with them in your first interview, it is up to you to establish their track record as well as the credentials that they hold. So you can find them in the bank, you can find them independently. On the Financial Planning Institute website, there is also a tab which says find a financial planner. There is a financial planner in every region. So they are readily available, but it's up to you as an investor or a planner to do the homework again. It goes back to homework and interact with your potential financial planner.
Sydney, your final tip for the week?
Yes, looking at today's show, I'm reminded of compound interest, and I think the students have got an opportunity to use that to their advantage. It is an opportunity for you to earn interest on top of interest, but over a long term. And I believe, the guys in the forum have got that opportunity to tap into the pleasure of gaining compound interest.
Sydney, thank you so much. And once more, thank you for being willing to open up and share with us and answer so many questions that a lot of the young people on the webinar today have. We wish you well and thank you again for your time.
Thanks a lot for the opportunity as well.
Well, there you have it, guys. The activities for this week are up on the screen already. So remember to log on to L+Earn Moodle platform, register, download resources, participate in the forums and quizzes, and of course, you can win weekly prizes. The website is www.l+earn.co.za or .org.za. There are prizes, which we're going to get into in a moment. And then remember, you will be receiving data for participating in this webinar. And in order to do that, you have to be registered on Moodle so that we can actually pick up your number and get the data to you, all right? So if you haven't done so, you can always email crystal@groundedmedia.co.za and Crystal will be able to assist you if you are having any issues there. Guys, that's it for this week. But before we go, can I quickly announce some winners? It has been a crazy one this week. We've had so much participation. Thank you to every single one of you for being here, for being so engaged, for really, really being committed to your financial journey and your financial future. I think that's what's so impressive. The fact that you guys show up, that you show up on time, that you stay until the end. And really, it's not even about the prizes and the data. I feel like the information and the caliber of guests that we've been exposed to so far up until this point has been phenomenal. You cannot put a price tag on this. And so really, really, really well done, guys, for being here. And thank you for participating in the program. All right, so let's go. Our winners for this week. And I know it was a hard decision, and I'm so glad I didn't have to make the decision. But anyway, here we go. So we have 2 participants who have been attending consistently and participating on Moodle. So that's how that was the criteria that was used for these 2. And for today, our winners are Kopano Moholo and Dorian Samuels. All right, so well done, Kopano. Well done, Dorian. Let's give some snaps for them. Let's give some congrats for them in the chat. And then we are going to have 2 more. So we've actually got 4 winners today. All right, remember that all of you are winning a 300 Rand shopping voucher that you're able to use at Checkers, and use that 300 Rand that you would have spent on groceries to save or to do something towards your financial future. All right, and so our 2 winners and these are 2 more winners for joining today and just for being engaged. That goes to Caleb Hoffman and Precious Sitosa. So well done to Caleb and well done to Precious. Both of you also received a 300 Rand shopping voucher just for your participation on today's webinar. And thank you so much, guys, once more to every single one of you for being here, for being part of the webinar. And that's really it. Remember to use the hashtag secure the bag. Remember to join Moodle, so register on the Moodle platform, participate. Questions and answers are going to be available there. We're going to try and the replays are going to be available there so you can rewatch today's webinar and the webinars from the previous weeks. And then join us next week when we talk about, what are we talking about next week? Credit. All right. So next week we're talking about credit, and you want to be here to to get all of that information. Once more from my side, it's been an absolute pleasure being your host on the L+Earn financial literacy program for young adults. Thank you once more to Imran. Thank you once more to Sydney for being here, and thank you most of all to you for giving up your Saturday morning to improve your financial status. Secure the bag. Hashtag secure the bag with the ASISA Foundation L+Earn financial literacy program for young adults. Thank you, guys. Have a great Saturday, and I will see you next week. Bye-bye.